Welcome back to the deep dive. Today we're heading back to Japan for another Japan Stock podcast edition. And I've got to be honest,
Oh, yeah.
when I first saw the name of the company we're covering, I almost skipped it.
Let me guess. Mitsubishi Gas Chemical.
Exactly, MGC. I mean, it sounds like a utility, right?
Yeah.
Or some generic energy company.
It does have that ring to it.
I was picturing smokestacks, slow growth, maybe a really dusty annual report. But then I started digging into the analysis you sent over, and wow.
Yeah, that's a common reaction. And it's exactly why there's such a fascinating case study.
You're not kidding.
If you just stop at the name, you completely miss that this is like a hidden tech giant.
Hidden is the right word. I mean, we're talking about a company that's basically powering the AI revolution, making our smartphone cameras possible, and trying to turn pollution into plastic.
It's a lot more like a high-tech materials lab than a gas company.
That's a perfect way to put it. So our mission today is to look past that name and really understand them through their own philosophy, right? This uniqueness and presence idea.
That's the one. And it sounds a little like a yoga mantra, I know.
A little bit, yeah.
But in the world of global chemicals, it's a survival strategy. We need to figure out how this company, with all this brilliant proprietary tech TIS, their seeds, as they call them, is fighting to get its profitability in order.
So they've got the genius part down.
Oh, absolutely.
Yeah.
But now they're wrestling with the business side to prove they could be as profitable as they are inventive.
I love that tension. Okay, let's unpack it. Who are they, really? If it's not just gas, what's the actual business mix?
Well, they are a chemical manufacturer, but a very unique one. They're across methanol, electronic materials, engineering plastics, and green energy.
Okay.
But the key isn't just the list of businesses, it's how deeply integrated they are. They don't just buy raw materials. In a lot of cases, they own the gas fields, make the methanol from that gas, and then turn that into these high-margin, high-tech products.
So they control the entire chain from the ground up.
Precisely. It gives them this incredible control over costs and supply that most competitors just don't have. But the real culture, the thing that defines them, is this seeds-oriented development.
Right, I saw that phrase, seeds. That means they start with the invention first.
Exactly. A lot of companies are market-led. They go out, see what customers want, and then try to build it. MGC often works the other way around.
Interesting.
They develop a unique technology, the seed, and then they go out and find the market, the need. They believe if they create something truly special, the market will come.
That sounds risky. What if you invent something amazing and nobody cares?
It is risky.
Yeah.
But when it works, you get something like BT resin.
Okay, yes, BT resin. This was all over the documents. Bismaleimide triazine. It sounds like something out of a sci-fi movie. What is it?
It's basically the hidden backbone of modern electronics.
Wow.
It's a super specialized material used for packaging semiconductors. MGC has a massive, massive market share. If you own a smartphone or a high-end PC or you're using an AI data center, you are almost certainly relying on MGC's BT resin.
So that's the uniqueness and presence right there.
A perfect example. It's a niche, but they dominate it so completely that the entire industry needs them. They don't want to be everything to everyone. They want to be the only one who can solve a very specific, very difficult problem.
Which is a great segue into their growth story, because it looks like that philosophy has been put to the test recently. You have these two plans, right? Grow UP 2023 and now Grow UP 2026.
That's right.
So what happened with the 2023 plan? How'd they do?
It was a mixed bag, to be honest. Top line sales, they actually hit their targets. Revenue looks great.
But I sense a but.
But the bottom line profits, ROE, ROIC, they missed. They missed the mark.
That feels like a familiar story for Japanese industrials lately. Great sales, but the margins get squeezed. What was it here?
The reports call it shifts in the times, which is, a polite way of saying the global economy went haywire.
Okay.
This is the period of the post-COVID inflation shock, the start of the Ukraine crisis. MGC depends on natural gas. Prices they exploded. Logistics costs spiked.
So they're selling a lot, but it's costing them way more to make and ship everything.
Exactly. And on top of that, they didn't stop spending. They were pouring money into investments for future growth. So you have this combination of high costs and high spending, and that just crushed their return on invested capital, their ROIC.
Which brings us to today, the Grow UP 2026 plan. What's the pivot?
The key word is resilience. They've realized that just chasing expansion isn't enough in a volatile world, so they've resorted their entire portfolio into 3 buckets.
Okay.
Winning, which are the businesses making good money now, growing for future potential, and sustainable for the green stuff. But the real change is that they are actively trimming the fat.
About time, maybe.
They're screening every single business against an 8% ROIC target. And if it's not winning or growing, it's on the chopping block.
So the spending spree is over, and now it's harvest time.
In a way, yes. They're still investing in the high-tech crown jewels, which we'll get to. But the overall theme is capital efficiency. It's time to get a return on all that money they spent.
Let's zoom out to that macro picture for a second. The reports mention China and the U.S. quite a bit. How is MGC navigating all the geopolitical craziness?
It's a real balancing act. The slowdown in China is a major headwind.
Right.
China is a huge market for basic chemicals. So when their property market slows down, that hurts.
But MGC seems to think they can handle it.
Their strategy is to sidestep the commodity market there. They know demand for the basic stuff is weak, so they're focusing only on those high-value differentiated products. The idea is that even if construction is down, Chinese factories still need advanced materials for smartphones and EVs.
That's pretty smart. And what about the U.S.?
The U.S. is a different kind of risk. It's less about demand, more about policy, regulations, maybe tariffs, depending on who's in charge. But honestly, the biggest macro factor for them right now is central banks.
The yen, of course.
It's a classic double-edged sword. On one hand, a weak yen is great. They sell their BT resin in dollars, convert it back, and the revenue looks amazing. But they import a lot of their raw materials. And a weak yen makes those imports painfully expensive.
And right now, we're in early 2026. The Bank of Japan is finally hiking rates. The Fed is looking to cut. That's got to be creating some chaos in their finance department.
It is the single biggest variable they're watching. If the yen strengthens, like everyone expects, their import costs go down, which is great for margins.
But the revenue conversion gets worse.
Exactly. What they really want is just stability.
Yeah.
They need the currency to stop swinging around so wildly so they can actually plan.
Okay, let's get to the fun part, the tech. We promised a hidden tech giant, so let's see it. What are the key drivers here? Starting with the crown jewel, semiconductor materials.
This is where MGC is just in a league of its own. We mentioned BT resin, but it's really about AI and 5G.
More data, faster speeds.
Right. Which means higher frequencies, more heat, you need special materials.
Yeah.
And MGC has this product line,
Yeah.
the HL920 and GHPL 920 series. Yeah. Well, engineers love them. This series actually won a major industry award, the GPCA award. The breakthrough is that it combines a high dielectric constant.
Meaning it stores electricity well.
Exactly. With the ability to make the circuit incredibly small. Usually you have to trade one for the other.
So they broke the trade-off.
They did. And that is a huge technical moat. As AI chips get hotter and more complex, the material they're packaged in becomes just as critical as the silicon itself. MGC is right at that bottleneck.
Amazing. Okay, driver number 2, optical materials. This one really surprised me. I always thought camera lenses were made of glass.
Not in your smartphone, they're not. Glass is way too heavy and thick. You need high-performance plastic. MGC makes these special polycarbonates and optical polymers.
What makes their plastic so special?
It's all about optical physics. You need two things, a high refractive index and low birefringence.
Okay, English, please. High refractive index means?
It bends light really, really well, so the lens can be much thinner and still focus the image perfectly.
And birefringence?
That's a type of distortion. If it's high, the light splits and your image gets blurry, almost like double vision. MGC has developed plastics that have an incredibly high refractive index while keeping that distortion near zero.
And that's why the camera bump on my phone doesn't stick out 2 inches?
That is a huge part of why, yes, it's a classic uniqueness business for them, and it's a total cash cow.
Okay, incredible. Now, driver 3, the future bet. Green innovation. I'm always skeptical when I hear green, but this carbopath thing, it seems real.
It is very real. Carbopath is their name for a circular carbon process.
Right.
And the idea is, well, it's audacious. They take CO2 emissions from factory exhaust,
So pollution.
literally pollution,
Yeah.
and they turn it back into methanol and then use that to make new plastic.
That's incredible. Is it a real business yet or more of a science project?
In terms of revenue, it's closer to a science project right now.
Mhm.
But you have to think about the world 10 years from now.
With carbon tax.
With carbon taxes, with regulations, the company that masters turning CO2 into a raw material will dominate the industry's cost structure. It's a long-term survival play.
And that fits their seeds culture perfectly. Invent it now, find the market later. Speaking of culture, there was this detail about ROIC trees that I found fascinating.
Oh yeah, this is a huge shift. ROIC, return on invested capital, is usually a concept for the CFO and investors.
Right.
MGC is pushing it all the way down to the factory floor, to the researchers in the labs.
How does that even work?
Well, an ROIC tree just breaks down the big number into small, manageable parts. Things like inventory turnover, production yields, waste reduction. They're literally teaching a factory manager, hey, if you reduce waste here by 1%, this is how it ripples all the way up and improves the company's overall return.
That's a massive culture shift
Yeah.
from just make great things to make great things efficiently.
And that is exactly what investors have been screaming for. It shows they're taking these efficiency targets seriously.
Which is a perfect transition to how they're treating those investors. So shareholder returns, what's the story?
They've gotten much more aggressive. The Grow UP 2026 plan makes total shareholder return a top priority. They're promising progressive dividends, but the really interesting part is their focus on PBR.
Price to book ratio. Yeah, that's the big topic in Japan right now. The stock exchange is pushing hard on this.
Correct. And MGC, like a lot of industrials, has been trading below a PBR of 1. Basically, the market values them at less than their assets are worth.
And management doesn't like that.
Management knows it's a problem. So they are explicitly using share buybacks and just better IR, better communication to try and close that gap. They're also selling off their old cross-shareholdings.
Right, those legacy stakes in other companies.
Exactly. Freeing up cash, becoming more asset-light. It's all very pro-investor.
So it really sounds like they're checking all the boxes. They have the tech, they have a solid plan, they're cleaning up the balance sheet. As we wrap up, what are the key variables for the next couple of years?
It really boils down to two things, I think. Harvesting and adoption.
Okay.
First, harvesting. Can they actually get that ROIC up to their 8% target after all that spending? They need to prove the ROIC tree culture is actually working on the bottom line.
Show me the money.
Exactly. And second is adoption. Will the AI boom keep driving demand for their BT resin? Will the smartphone market stay strong for their optical materials? They've planted the seeds.
Now the market needs to bloom.
That's the one.
It feels like the whole story started with this boring name, Mitsubishi Gas Chemical.
And we ended up with this deep tech material science lab. The so what, for everyone listening, is that MGC has all the ingredients. They have the technology.
They have the seeds.
But the big question is, do they have the agility to match the needs of a super volatile global market?
That is the question. And I think this is where it gets really interesting. The question isn't whether MGC can invent the future. It seems pretty clear they've already done that in their labs.
Right, the tech part is proven.
The question is, can they execute? Can they sell it efficiently enough to finally stop being priced like a gas company?
And start being priced like the tech company they actually are.
And that's the opportunity, isn't it? If they pull this plan off, the market might finally wake up and see what's been hiding in plain sight all along.
And that's usually where the real value gets created for investors.
A hidden gem. Thanks so much for breaking down the chemistry and the capital for us.
My pleasure. Always fun to get into the details.
And thank you for listening to this Japan Stock edition of The Deep Dive. We'll catch you on the next one.